Have you ever heard of the silent war happening right under our noses? It's not fought with armies, but with numbers, policies, and something called bond yields. This is the battle between governments and the bond market, and when it flares up, the consequences can be massive for all of us. Let's rewind to 2022 in the UK. The government announced a huge tax cut, planning to borrow a lot of money to pay for it. The bond market, which is basically a giant group of investors who lend money to governments, got spooked. They thought, can the UK really afford to pay all this back? So, they demanded a higher interest rate on the money they lent. This is what we call the bond yield. As yields soared, the cost of borrowing for the UK government skyrocketed. The financial chaos was so intense that the Prime Minister had to resign, and the policy was reversed. The bond market had basically vetoed the government's plan. So how does this work? When a government spends more than it earns in taxes, it issues bonds to cover the difference. This is public debt. Investors buy these bonds, and in return, the government promises to pay them back with interest. The bond market's power comes from setting this interest rate. If investors lose confidence in a government's ability to manage its finances, they'll demand higher interest to compensate for the risk. This makes borrowing more expensive for the government, which can lead to budget cuts, higher taxes, or even a full-blown economic crisis. Central banks, like the Federal Reserve in the US or the European Central Bank, often step in. They can buy government bonds to keep interest rates low and stable. This is a bit like a referee in a boxing match. But even central banks have their limits. If the government's debt gets too high, even the central bank can't hold back the tide of nervous investors. This isn't just a UK story. We've seen similar dramas play out in Greece during the Eurozone crisis and in other countries. It's a constant tug of war. Governments want the freedom to spend on things like healthcare, infrastructure, and social programs. The bond market acts as a check, enforcing fiscal discipline. They are the silent guardians of economic stability, or as some might see them, the cold-hearted accountants of the world. So the next time you hear politicians talk about spending plans, remember the invisible force of the bond market. It's a powerful player that can make or break a government's agenda, reminding everyone that in the world of finance, confidence is everything. Thanks for watching, and if you found this interesting, don't forget to like and subscribe for more deep dives into how the world really works.